All right. Welcome to the stream, folks. Thank you for joining me on this Friday after quite a tumultuous week, no matter what you're looking at, whether it was crypto or the TradFi markets, as people remind me, is what it's called in the crypto circles. It's been a very interesting week. I've had a good week myself with futures, NASDAQ futures and ES futures mainly. But if you were long crypto, I don't think that you had a very good one. And the reason for that is FTX. Sam Bankman Fried or something like that. Where's that meme of when I die, Sam Bankman Fried? Where's that meme of him going to like doom? What was it? Jen, find me that meme of when a girl goes to heaven, she sees all her relatives, but me. It's like that. It's like a doom meme. See if you can find that for me. But anyway, people were very aggravated at this guy. Interestingly enough, top donors to political parties this year. I think he was one of the biggest donors this year too, second only to. I need to have my memes ahead of time. Yeah, exactly. So, yeah. So this is exactly. So, yeah. A lot of people are going to be looking for him and blaming him for some lost bags. I think that he was actually he was the second highest donor to the Democratic Party before the elections. I think he donated something in excess of $30 million. And people said, "Oh, he's a billionaire. He can do that." Well, no, he's not. So, congrats on that free money that no one will ever have to pay back. And so, yeah, that was this week, but that I don't think that really dominated the market sentiment this week. The market was not really dominated. The stock market was not dominated by the election at all. This right here, 8:30 on Thursday, that was a CPI report. That was the Consumer Price Index report that came out, and that basically is what drove the market. Now, the expectation, the market forecasted that there would be a 7.9% CPI, which would be 0.3 tenths of a point lower than the last print, but it actually came in 7.7. And we're talking about 2 tenths of a point here, which is not really that big of a difference. Inflation being 7.7% is still much higher than the 2% that the Fed, has as target rate. But that is enough to send the market rocketing up on that news in the expectation that the Fed is not going to continue to raise rates or continue to raise as fast. Now, I've been watching the DXY, the dollar index. Oh wow, okay. Yeah. All right, so over this week actually is okay. I didn't actually expect it. I guess I haven't been keeping an eye on it this time, but I had looked at this little range that the DXY had been forming right here, starting at a high back in September. And if you notice, the DXY, the dollar index, is a index of all the different currencies that trade against the dollar, mostly euro and yen. It has been going on a big bullish trend. Now, I don't care if it is a bullish trend in crypto, it's a bullish trend in a stock, or a bullish trend in copper or pork belly futures. What goes up must come down. And so, as as the dollar has been stalling out, it has been flashing a signal to me that the market, the lizard people, the powers that be, are pricing in the end of rate hikes. That's really what it kind of says to me, because this is going to be speculative. What big players are doing, hedge funds, banks, etc. And it's people aren't really buying up dollars quite as much because forex, foreign exchange, currencies are determined. The value of them relative to each other are determined by what these central banks set as their interest rates. And as the United States has been raising their interest rates, the dollar has become stronger versus all other currencies. The two main things you want to look at is, of course, the euro dollar, which kind of messed around at one parity for a while, and the dollar yen. Dollar yen, I know I talked about this last week. It did one of these trending spikes where it shot up on October the 21st and slammed back down with inside the range. Set up a little trade right here to the 50% of that reaction down. And yeah, wow, yesterday and today, definitely the market is pricing in a pullback. So essentially, I got to say that the dollar is starting to look like it's going to pull back. And that means a couple of things. I mean, that means that equities should be going up. And historically, that should mean that crypto has been going up. But that's, of course, not the case. So one of the things I want to point out is today is if we look at the NASDAQ futures, and we can go here in TradingView and we can do a correlation coefficient. And let's compare this to Bitcoin. We'll use Coinbase even though I don't like them. Okay, that's a weekly. Let's look at the daily. Okay, yeah, that's what I was looking at. So for the better part of the last year, since the beginning of the year, crypto and equity futures have been highly correlated, sometimes getting all the way up to 0.96%. They've been moving together as they're both looking at interest rate decisions as their driving factor, because like it or not, a lot of borrowed money went into cryptocurrency. And so as this has continued on, this correlation has kind of gone back and forth, but has always stayed positive until now. Today and yesterday, you see where the stock market has been going up, but because of the FUD, fear, uncertainty, and doubt in the crypto space, crypto has been going down. And just to kind of lead things off, oh, no, come back. Get rid of you. As I made sure to put in the thumbnail for this live stream, I think it's very important to note what price action is doing. Now, I know this is just astrology from men for some people, but I'm not going to dazzle you with fancy charts and things like that of what is or won't be based on the lunar cycles and things like that. Very simply speaking, it's a self-fulfilling prophecy that we all know that the June low on Bitcoin, which was set on June the 18th this summer, here on Bitfinex, it was 17,605. Let's do a little more normie stuff and look at Coinbase. So the Coinbase low was $17,567.45. But as we come in here and we look at where yesterday closed, now this is the key thing. If you look at nothing else in studying price action, look at closing prices. The key thing to look at here is yet a Wednesday, when all this craziness started to happen with FTX, really start hitting the market. Actually, the craziest started on Tuesday, and that was when things were still going through they're going to get a bailout from Binance. But once all that fell through, about 12:30, about noontime on Wednesday, the bottom just fell out. And Wednesday, this daily bar closed well below. It got all the way down to the 15,000s, 15,000, let's call it 500. The chance for recovery was on the Thursday bar. Up it went. But this bar actually closed to hold below the June low. Now, it's just a few dollars in there, but lacking anything else, lacking any crystal ball, we have to go on this as a sign. Now, anything can happen. Price can get back up above this level right here. It can, if it closes back above, I'll come on here and I'll say, oh, look, we're back in good territory. But as this week comes to a close on Sunday night, watch this weekly bar. Watch this weekly bar to see if it closes or holds the low from June. Then you'll know. Well, you'll have a really good idea of what to base your own analysis on. Now, I know this may be uncomfortable for some. I know that a lot of people believe that Bitcoin is better money than the US dollar. But, well, right now, people just aren't buying it. And I hate to hear this thing that people talk about where, oh, the price is manipulated. I'm just going to go ahead and say it. That's just max cope. If you have a Bitcoin and you want to go sell it to a friend, you want to say, hey, friend, Bitcoin right now is selling at $16,757, but it's really worth $20K. It's that price that you see right there is just manipulated. Like, here, I'll sell you my Bitcoin for $20K. If you can get that friend to buy your Bitcoin for $20K, then yeah, it is worth $20K. But I don't think they're going to do that. They're going to go out to the multitude of markets, multitude of exchanges, or even another private party, and they're going to be able to find that Bitcoin for $16,778. And they're going to take that deal instead of yours for $20K. So no matter how much you think that it's manipulated, the price right now is the price. So it makes for really interesting Twitter threads. It makes for very ego-assuading cope to talk about how the price is not really the price, but the price is the price. And that's where it is right now. So if you're joining and you have comments, you want to tell me that I'm wrong, feel free to put it in the chat, and we will talk about that. But one thing that I want to do today is I want to educate us a little bit on the FTX debacle. And we're going to watch a CoffeeZilla video. It's about 11 minutes, but I'm going to pause it to add commentary so that it does not get some kind of a copyright strike or anything like that. But like this guy, he's very good about calling out scams and things like that. And yeah, so let's jump into that, and then we'll do some commentary and market analysis after that. So let's have a little bit of fun. Sit back and watch this for a little bit. Make sure.
Here to tell you who won. Crypto Armageddon is here. The biggest players in the world are at war. They're fighting it out, and I'm here to tell you who won and what's next. Now, I'm going to be honest. I called this yesterday. I warned you guys that FTX, second largest exchange, might be insolvent, and people.
So this was a pretty easy call to make. Let's go back to Celsius, and I can go back even further. Let me tell you a little story here. So FTX paused withdrawals. What day did they pause withdrawals? Was it Tuesday or Wednesday? FTX pauses withdrawals. That was... Well, that's BlockFi. Come on, FTX. Bah. Okay, so that was either Tuesday or Wednesday. That was the big news. And originally, people thought it was fine. I saw some people posting like, oh, I just got some Ethereum out. I just got some things out. Yeah, sometimes they'll let you do those kind of things. But it's a pretty safe bet. And I wanted to have a little bit of doubt. I wanted to give them the benefit of the doubt because, after all, I was still sipping on a little bit of the Kool-Aid after seeing FTX at the back of home plate on lots of sports things. I mean, they had, Larry David, advertising for them. I'm sure he goes into that here too. But I mean, I was pretty surprised that FTX, so big as they can, too big to fail almost, but no. When a company pauses withdrawals, that's insolvency. I mean, Celsius did it a few months ago, and a lot of people were saying like, oh no, maybe it's not. No. Before that, Mt. Gox was an incident that I was able to skirt around when Mt. Gox, over a decade ago, whenever that was, maybe it was even more than a decade, 2009, when they paused withdrawals of US dollars, I was able to get my Bitcoin out. And the reason I did that was because I had a mentor that traded with a company, I think it was MF Global. It was like a Forex brokerage, and they also had that situation happen for him, maybe 2009 or something like that. No, earlier. Can't remember. But he told me that was what happened to him, and he lost his money there. So when they halt withdrawals, that is insolvency. So anytime in the future when you see someone do that, you had best go ahead and do all you can to add to the bank run by looking out for your money, because it's pretty much game over after then unless you can do something about it. So it's another example. Take that as a truth.
People called me crazy. They said, no way the guy who described all of DeFi as a Ponzi scheme could be bad. Sam Bankman-Fried, he's just too smart. FTX after...
Yeah, he was becoming quite a cult of personality. I didn't know who he was until this incident came about, but apparently in the Twitter space, he's known by his acronyms, SBF.
After all, is endorsed by Tom Brady.
What
could go wrong with another celebrity endorsement? People like Larry David backed FTX. Surely your funds are safe. Well, turns out they were actually in danger all along, and things are looking very bad. So I'm going to explain to you this entire mess very quick, but bear in mind this is a very dynamic situation. Things are changing by the hour. But let's get into it. Once there existed two rival crypto exchanges, Binance and FTX, the number one and number two crypto exchanges, and their CEOs, CZ and SBF, or Sam Bankman-Fried, hate each other. That's an important part of this story. But things were calm at first, for the most part. Bear in mind, this is a very dynamic... Until recently, SBF decided to take a pot shot at his competitors' attempts to work with regulators and say...
All right, hang on a second. Okay, let me fix that. I think I have some TradingView chats things going on. Mr. Techies, is there any chance FTT will rise again? Well, my friend, FTX, which is who created the FTT token, they are bankrupt. So you do bring up an interesting question. I'm not sure. I can't really answer that question. I think what's interesting is that it's still trading right now at about $2. But the company that issued it is going to go out of business. And if that is an asset, they're going to have to liquidate it. I'm not sure how that's going to work. I really can't answer that question for you. But this is one of those things where I don't think you're getting a deal on something. I don't think that you, I think there's a lot of better places to put your money. But if you're already kind of in on FTT, I think you need to kind of assume that it's a write-off at this point. Because I don't think you can actually withdraw anything from FTX right now. I'm not sure. I've never used FTX.
Said, he is allowed to go to DC, right? Implying that CZ was banned. Now, he didn't know it at the time, but SBF set off World War III in crypto with this tweet, and he might have signed his own funeral. Because a few days later, a report came out from CoinDesk leaking FTX's financial balance sheet. And what it showed is that they had a lot of money, but it was sort of locked up in all these token projects they were a part of, most notably in FTT token, Solana, and other projects that they were behind.
Yeah, so Solana is, let me bring that back up. Solana is one thing that I was following for a good friend of mine. That was something that he got really, really excited about. Where are you at? There you are. And I've been following it for a while. It's a big yikes. But I'm not sure. This was basically going to be a replacement for Ethereum, as it was described to me, because it had less gas fees. People were going to use this for NFTs. And I remember very specifically when my friend got in somewhere around the 110 mark on this little run up. And I was doing the analysis for him, watching. And it basically came up to the 140 mark. Yeah, 140 right here. And I really tried hard to get him to take some profit. He captured a good 30% right in there. This is around the same time that Ethereum hit 3,500. This was that April kind of last gaps, the bull trap that most people thought it was. It's what you call it, a bull trap now that we see. And he didn't quite listen to me, but as it came back down to his break even around here, back around the 110 area, got him to close it out. And then anyone that was still hanging on after it broke these lows, I don't know what to tell you. This is the same kind of situation that I was talking about at the beginning of the stream when it comes to Bitcoin. When you have a close below a major level like this low, that's your sign that you need to get out. Now, hopium might lead it to come up just a little bit more, but you don't want to be in a situation like this where you could have gotten out with a painful loss at 70 instead of gotten out with nothing at 15. So
Solana and other projects that they were behind, and they couldn't sell the projects anytime they wanted to.
yeah, so it seems like they had a lot of these tokens, or they had a lot of Solana on their balance sheet. And the way that works is those are listed as assets that they can borrow with. But as these underlying assets go down so quickly, suddenly they run into a problem where the leverage that they've taken on these products is not, they're not able to get anything for it.
In other words, even though they had billions of dollars worth of assets, they weren't very liquid, and it was arguable that some of the coins weren't that valuable, so they couldn't get access to these funds immediately. Meanwhile, they had huge liabilities of $8 billion, $7.4 billion of which were loans. Now, Dirty Bubble Media, who is the person who called out the collapse of Celsius, which we've talked about extensively, picked this up in a scathing report. In it, he suggested that FTX and Alameda Research might be insolvent because all their money was locked up in these tokens that might be worthless. And if
Yeah, that's what happened basically. Hey, Jen, can you do me a favor? Can you check the TradingView live stream? Make sure that it's a video over there. I want to make sure that's working. I can't really see it on mine. Or if you're on TradingView and you're seeing all this stuff on the screen and hear me go, give me a thumbs up. Just want to make sure. My double checking here, I don't see it on mine.
that might be worthless. And if everyone tried to withdraw their money all at once, the company could likely not pay off their liabilities. Now, CZ saw this and decided to take an opportunity to strike against his biggest rival. He announced that day that because of recent revelations, because of that report.
Hang on a second. Is any sound coming through? Start.
Quote.
Try now. Okay, I just started it, and I'm talking on the TradingView live stream. Tuck, 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 check, check. Worked last week. Let's see. Yeah, stream offline. Okay. All right, we'll just continue on the YouTubes and Discord for now. Okay.
We have decided to liquidate any remaining FTT on our books. Now, this was massive given that FTX's #1 holding was FTT. Their competitor Binance is saying that they're going to dump up to $2.1 billion worth of it on the open market, causing that price to plummet. Now, all of a sudden, you don't even have illiquid funds. You just have none of those funds. So even though CZ said that this was not a move against a competitor, it kind of...
Yeah, a lot of people were debating this where essentially they were looking for a bailout from Binance. They'd had a friendly relationship in the years past. But the news, as I remember it coming out this week, was originally the rumor that really sparked the crash of crypto. Let me bring that up real quick. So as the time went along, and I'm going to use Bitcoin for this because it really kind of. So I remember this was Monday of this week. That's when all this FUD was coming out. And they said, or it was reported, leaked, whatever, that they needed about $1 billion of liquidity to stay afloat. And when Binance said that they were entering talks, you had this rise right here about noon on Tuesday. That was the FUD leaving the market, the hope coming in. But then a little tweet came out 12:30 noon that said they actually needed something more like $5 or $6 billion. And later, at some point, Binance announced that no, they're not going to actually bail them out.
It looked like it was, right? Of course he's going to say that. In reality, he knew what he was doing. Now, immediately, this stoked all sorts of fears about the solvency of FTX. And the fear spread like wildfire. Is FTX the next Luna? Is FTX the next Celsius? And people started to withdraw funds like crazy, which honestly was the logical move to make.
Yeah, it is a logical move to make if you can get out when you can. It's funny. I can't claim that this was my idea, but I was watching Asmongold, and he was kind of reporting on this earlier, that this was, and he's such a smart guy, actually. He doesn't do anything with finance, but he pointed this out. This is something that happened 100 years ago with the savings and loans and the savings and loan crisis in, I think, the 19 teens or something like that, and also the great stock market crash that triggered the Great Depression. Those events were banks getting over leveraged. They had people depositing their money, but then they were making out bad loans. They never got them back. That triggered the creation of the FDIC, where the federal government insures your money. Why? Because you can't trust these banks to always have your interest in mind. And so now you have you have the decentralized Wild West of crypto. I use quotation marks there because a lot of these centralized exchanges are doing the exact same thing that banks did in finance 100 years ago. They are playing a little fast and loose, creating these financial products with other people's money and blowing up value. But there is no FDIC for crypto. So the great promise, the great returns, the great yields, the YOLO gains, the Lamborghinis are bought on the risk that people's deposits in these centralized exchanges can and do go to zero. That's the risk people take to get these fantastic rewards that they're seeking. It's been an interesting wealth transfer the last few years. Who knows if it'll continue, but it's not been without things like this happening. This is why you get paid. You get paid.
Problem with crypto exchanges right now is that because there's no monetary insurance on your money, even if the probability of an exchange going bust is less than 1%, you still have to take all your money out, because if they do go bust, you lose everything. If it doesn't go bust, you only lose a fraction of a percent on trading fees for being cautious. And so there's really nothing to risk by taking your money out, and there's everything to risk by keeping it in. So basically that means bank runs are extremely common these days, and a lot of these exchanges, they're really not ready for it. In fact, Sam Bankman-Fried himself said that a lot of crypto exchanges are secretly insolvent.
Yeah, hey Jen, can you check TradingView again one more time? Make sure it's got a screen and send me a screenshot of it. Yeah, I've been really reminded this week, and I've been repeating it. This would be something related to what Warren Buffett said, and essentially the tide. Okay, good. The tide has gone out, and we're still finding out who's swimming naked. It's so funny that this FTX was so big. I remember just being bewildered at seeing the advertisement for FTX at sports games. It did not compel me to use them. It's one of these things where I kind of gaslight myself, where it seems sort of obvious to me that when these crypto exchanges are advertising, they're trying to pull in more and more retail investors to pump up the top. And that is not a bullish signal. That is not something that makes me want to buy. But then again, I'm thinking that during a time when there's still crazy gains going on. So maybe I'm crazy. Maybe I'm the one that's wrong. Maybe this signal is not what I think it is. But now, it seems my gut was right.
Easy to buy all of his FTT off market.
Yes, this goes into a little bit more drama about it, but that's a pretty good high level of it. I just don't feel like going through the whole video the rest of the time. So, I don't know what's going to happen with it. I think I just have to go back and look at the price action to see what the market is going to do with this news. I don't think it's deadly for crypto. I'm sure that a lot of crypto Bitcoin maxis and people in crypto in general are saying this is another example of why centralized exchanges are bad and not your keys, not your coins. All true, all true. But it definitely it takes out a major player that was spending millions and millions of dollars advertising crypto to people, and really and truly, you need people to buy your bags for them to be worth more. I'm sorry to point it out to people. I know that you have all these very compelling arguments about why Bitcoin is valuable because of its scarcity, but the reality is it doesn't have anything backing it except people's perception of value. If people don't think it's valuable, if people don't want it, it doesn't go up. The same can be said about any cryptocurrency, but I would actually argue that having a use case, having a reason people spend it, is better. You know, the whole model of Bitcoin is hodl it, don't spend it. You know, with Ethereum, with the change of proof of staking and burning coins, they're actually trying to encourage people to use it. I know that I have a very strong case for Monero because it's being used on the dark web now, much like Bitcoin was used a decade ago. And there's also something else that happened this week. Hold on. So there was a federal seizure, the largest seizure of Bitcoin ever this week. Oh, it's the second largest? Okay, it's the set. I love how it's this right here is funny. Crypto recovery. Okay, so they seized money that had been stolen from a black market place. Recovery implies that you're going to recover it and then give it back to the person it rightly belongs to. They're not going to do that. I think it's just a federal seizure. I think they just seized it. I don't think the rightful owners of this are going to get it back because according to the feds, there are no rightful owners. But anyway, what's interesting is this guy lived in Gainesville, Georgia, which is just up the road from here. I've been talking in my local circles about, did we know the guy? Did he come to one of these meetup events? And so far we don't really know. I haven't seen a picture of him. So actually, is there a picture of this guy? Hang on, let's see if there's a mug shot of the guy. Go away, CNBC. I have a theory. That the reason they are, I don't think that's James Zong. Is that James Zong? I don't think that's James Zong. I don't. That guy had $3 billion in crypto. I don't know. Sorry, I'm being a little. I'm surprised they don't have it actually. That's funny. Okay, so I don't have a picture of him. So if we know him, if I recognize him, I'll come and say that. But I have a suspicion that Ross Ulbricht, who ran Silk Road, is working with the feds on this because otherwise, how would they have known? By the way, I'm going to bring this all back to Monero here in a second. But it's interesting, the way that they found this guy was a couple years ago, there was a hard fork of Bitcoin into Bitcoin Cash. Well, nobody really wanted or still wants Bitcoin Cash. So what he did was he took the forked coins that he had and he immediately traded them in for Bitcoin on a centralized exchange. And of course, that created a paper trail back to him. So that is why he got caught. Bitcoin Cash actually caught him. But my point here is this. We've had another seizure of the hackers of Bitfinex earlier this year. They got found through on-chain analysis. They got traced and tracked, just like these people were found on the Bitcoin blockchain. Hackers, bad people, are taking note of this. Don't worry. There's no question about it. You may, if you're a hacker, think about this. Think about you're a bad person. I know everyone wants to think that they are a good person when they wake up in the morning, but just imagine you're a bad person and you want to make sure you keep all your bad money. Well, ideally you do want to have it in Bitcoin because Bitcoin has been around the longest. It's going to stay around the longest. It's still worth the most of all the cryptocurrencies. And you can go anywhere in the world and you're going to find somebody that can probably give you some local currency for that Bitcoin in case you need to flee. Like why you would still continue living in Gainesville, Georgia with $3 billion of illegal obtained Bitcoin. Well, that's just a mistake. But hackers are going to take note of this. They're going to take note of how easy it is to trace Bitcoin. And while they may not trade all of their Bitcoin in for a more privacy-centric coin, I can almost bet that they're going to look at some alternatives to Bitcoin that provide them a little more security, like that of the anonymity and privacy by default of Monero. And while Monero has, of course, gotten hit with all the other cryptocurrencies out there, I think it's important to take a look at the Monero versus Bitcoin chart. Now, the Ethereum versus Bitcoin chart is a little irregular. It's funny, it's kind of holding at this support right here that I've had marked off in previous live streams. That's actually kind of cool that this week it came down, bounced, and held. But Monero versus Bitcoin has been slowly trending up. Monero versus Bitcoin has been slowly appreciating. And it's not the best of reasons, but if you're in danger of losing everything to a federal seizure, where would you rather have your money? That's just an additional use case that I see going into the future with Monero. And a lot of people doubt me. A lot of people, especially Bitcoin maxis, they hate for me to point out anything other than Bitcoin. But I think you have to pay attention to what the relative price is telling you, and think about it. Think about what people that have huge sums of, crypto locking scam, money are going to look to do if they want to secure the value that they have stashed away they've gotten from bad people. You don't have to be a bad person to use Monero. You can be a good person. In fact, I wish that more and more good people would, so that it would not get such a bad rap. There's a chance, and this is the counter argument that I get, that Monero will be banned because it is only being used for illicit purposes. Well, same thing I heard about Bitcoin 10 years ago, that it's only going to be used by criminals. I think that's being a little short-sighted. I think the cryptocurrency is a tool for human freedom, and the thing that really embodies that potential is Monero. There are other privacy coins out there, but what was it, Zcash? I remember Zcash was one. Yeah, that's not holding its value. Let's see, Zcash, BTC. Yeah, that looks a lot different than the Monero versus Bitcoin. So Zcash is not the choice. But if you're really looking to diversify your crypto portfolio, the only three things that I look at, the only three coins that I look at are Bitcoin, Ethereum, and Monero. It's all I've ever looked at through all this turmoil and really for the last several years. It's the ones with the use cases that I can know, and they're not that hard to keep up with. They're basically the blue chips to me, blue chips of crypto. So, all right, if you got some questions, if you got some comments, post them in the chat for me. If you want me to look at anything, more than happy to do that and give you my opinion. You may not like it, but it's going to be my honest opinion. And then we're going to do some market analysis, take a look at where things should be going, and that's how we'll close things out. So, all right, let me catch up on chat here. So, yes. All right. Sure, man. IBM. What does IBM do nowadays anyway? IBM on the monthly. Okay. Let me take off the spike indicator here. Let me add my retracements. And we'll do an Ichimoku. Okay. I like it. The macro looks strong. Well, I am not. Macro is above my pay grade. But in terms of price and action analysis using monthly Ichimoku, what you have here for the last couple months, for last half of 2022, it's starting to do a potential cloud breakout. Okay, do a spike for the 1 minute. Yeah. So it did a spike back here in COVID time, and really on the monthly, because it's on a monthly time frame, that spike it made down, and then the range that it started capturing right here, that's a good level to go in. I like it. I like it. And what you're going to see coming up pretty soon, hopefully, is your momentum, your Chicao or lagging span get out, and that's going to signal you for a bullish trade. Cool. When price of IBM gets to about 150, you're good to go. You're good to go for a long-term investment in that. I like it. Let's hop back to Bitcoin for a second, because I did a little post that actually got on the editor's pick where I talked about last Friday. Last Friday, I brought up the Lord of the Rings, where Gandalf talks about hope being kindled, because last Friday, when I was looking at this, we were not bullish yet, but for the first time in a long time, for the first time since, well, honestly, March of 2022, Bitcoin had finally gotten above the cloud. It had finally given you the first sign of a trend change. But, momentum had not gotten out yet. You didn't have that extra confirmation of the lagging span to confirm that price was on the other side of the cloud. And so you really had to be patient to wait for that to happen. And the reason you're supposed to be patient is because, well, this. Because this never gave you that second confirmation. This never gave you that additional bullish confirmation to go long. Ethereum also did the same thing. It got itself out of the cloud, but never confirmed it with a close of the lagging span, Chicao, momentum, whatever you want to call it. I did also note that Monero on this bar right here did poke its head out right there. So again, that didn't work in that case. But using this, Monero was actually a little more bullish. This would have been the one that I would have gone for. But if you're just watching Bitcoin, and I've done videos about this, they're in my catalog, using Ichimoku analysis, using it to know when something is bullish or bearish based on the daily cloud, using the classic settings, outperforms HODL. I need to go back and update that for this recent downtrend, because I look back over 10 years, and if you only go long when you have both price and momentum on the bullish side of the cloud, that actually means that if you had bought $100 worth of Bitcoin in 2012, you'd have a lot more fiat relative value if you had traded in and out all the times in the last decade that had gone above or below the cloud. Because we got below the cloud back in April of this year, and so you should have been selling out of your Bitcoin, converting it to cash at 39,000 instead of hodling it all the way down to 16. Or even if this little FUD hadn't have happened, you would have sold your Bitcoin at around 39K, and you would have bought it back, if it had gone up at that point, at 22. You could have captured all that difference that the people that say they're too busy to worry about watching price, you would have outperformed them. But now, we're not going to look at Ichimoku, like I said earlier in the podcast. Watch this level. Watch that June low. Watch this Sunday when this weekly bar closed. Anything can happen this weekend. It's not far off. But watch this weekly to see if you can get it back up inside this range. If you don't, maybe give it one more week. But if we come into the rest of the year and we haven't recaptured this June low, you're going to be a very sad panda. I still don't. Let me talk about sentiment here, mass psychology and sentiment. When Sailor gets liquidated, that's a really good question. I need to do my homework and find out, because that is, honestly, that's my buy point. It really is. When Michael Saylor is getting liquidated and he's forced to sell his Bitcoin into what's already probably a very bearish market, that's your buy point right there. That will be the bottom. Yeah, it's going to be such karmatic justice for him telling people way back up in the 50s and 60s to mortgage their house, sell their business, and buy Bitcoin, his bag. He has to lose. He has to lose. He does. He doesn't have to lose. It would just be karma, essentially. That was bad advice for people. Talking his bag. What really aggravates me is these conversations I had with these younger Bitcoin maxis back around the 60K, where they've known me for many years. They know that I've been dealing with Bitcoin for over a decade. They know that I've seen these multiple bullish and bearish cycles, and they couldn't understand why I wasn't buying Bitcoin at 60K. And they would send me podcasts of Michael Saylor as proof for why I'm wrong. Aggravating. Very aggravating. Very aggravating. The reason that apparently that guy was more of an authority figure is because he was selling a dream to people. He was selling a dream to people that the wealth transfer in cryptocurrency that happened over the last decade was going to happen to them when they were buying it, when everyone else was excited about it. The inverse is now true. I hang around in a lot of different chat rooms, telegrams, and things like that, mainly because crypto people are my people, but I also use it as sort of a sentiment indicator. Back in June, when this crap was going on, when there's a lot of FUD based on Celsius, I remember having this discussion and kind of trolling and poking just a little bit. Yeah, I like to troll. This is my mascot right here, my stockbroker troll doll. And I was poking the bear of people to, he does have to lose. You're right. Everyone was still very, very optimistic. They had smiles on their faces. It was that whole, I need like a meme board, not like a sound board. I need a meme board. What's that guy that's like, he's kind of smiling, like, like they were all thinking that they were getting cheap coins back in June, and they were, very happy to, keyboard warrior about how, all these people are going to be, sad when I'm so much richer than they are. On this recent dump, I don't see that kind of arrogance. That's actually a bullish signal, by the way, because I've been saying this for this whole period here. It's not it is a matter of price, but it's also a matter of time. You've had time through this consolidation from June for people to get really bored and frustrated. This right here, this dip down, people saw as a buying opportunity for crypto. But after that buying opportunity, they didn't get rich really quick. They didn't have all the money they were thinking they were going to have. They didn't buy the Lamborghini the next month they thought they were. And so slowly they start to doubt. And as that doubt comes in, it is reflected in the price. People ask me all the time, when are you a buyer? When's the bottom of crypto? And I tell them something along the lines of when you stop asking. When people stop buying crypto, that's the bottom. Because that is when the maximum amount of fear, when people tell you that cryptocurrency is the worst investment you can ever think of, when they tell you that that was just all a scam to begin with, that's the bottom. But as long as you still have people being listened to that have large followings that talk about how crypto is going to go up, crypto is going to solve everyone's dreams, people are still teaching classes on crypto, that is not the bottom. And it's going to be very hard. It's going to be hard on me. It's going to be very difficult for me, even. And I'm no smarter than anybody else, I don't think, for me to separate that out, because I'm a contrarian by nature. But I'm still going to be part of everyone. And so when everyone thinks that crypto is the worst investment, when everyone thinks that Bitcoin is going to go to zero, when everyone thinks that Ethereum is worthless, when everyone thinks that Monero is going to be banned, that is going to be the bottom. But it's going to be very hard to buy that bottom, because that is what people believe at that point. And you're going to hear it, you're going to hear those arguments, and you're going to believe it too, because the price is going to be so low. But price is just a reflection of people's emotions. So as long as the price stays up, that means there's optimism. When there's an absolute void of optimism, that's the bottom. It is that simple, but of course it's not that simple to execute on that because we're having to check our own emotions. We're having to check our own feelings about things. So that's why I use technical analysis. It helps to separate out that emotion by having a clear, defined yes or no, Boolean, true or false value. And right now, for Bitcoin, that true or false value is the June low, the low that it made on the Celsius FUD. If it can recapture it this weekend, then there's a chance that things will be fine. But if we don't, then you can expect this malaise of consolidation to continue, just lower. Or as these assets begin to go down in value, the balance sheets of these companies, these exchanges, these funds will continue to get less and less strong. And you may have some more insolvency crises going on. We'll see. Not to add to the FUD, but that's what's going on now because a lot of these companies had these tokens, these projects on their balance sheet as assets. And if they need borrowed money to keep themselves going, well, they can't pull their liquidity, they can't pull the value out of these coins, and interest rates are continuing to go up. Oh, but, where's my Telegram? 1 second. It is interesting, though, that on the topic of interest rates, there was a little dip this week on, where is it? Where are those interest rates? Oh, there we go. It was a Reddit post, but you can get it from anywhere else. So I talked to a mortgage broker for a friend this week, and they said that interest rates were over 7. Their business was very, very hurt, very, very much in pain. They hadn't had very much luck with getting people to finance things, but we finally had a dip this week of almost 0.5% in the 30-year fix down to 6.62. It was over 7, but now it does seem that mortgage rates are starting to come down, and it all comes off of that CPI print on Thursday. I don't know exactly how mortgage rates work, but I have to imagine that the people that set these, that sell these mortgage rates, they are trying to forward look at what interest rates may be in the future. And so for it to pop down because of an inflation print means that whoever is in the market setting these interest rates, they're like, oh, okay, well, interest rates may be stopping here. So we only need to be making that 2.62% over the 4% Fed rate. Okay, well, we're happy making that money, that premium. So it was interesting that actually went down. And again, that comes back to what I saw coming up this week on the DXY, where you had this consolidation price, the acceleration of the value of the dollar going down. People were starting to price in the end of rate hikes. I'll go on the record and say that. I could be wrong, but we'll have a Fed meeting. Let's see when the next Fed meeting is. I streamed this last one and made some pretty good money. That was not this week, but last week, I believe. Let's see when the next FOMC meeting is. Let's bring this up right here because that's going to determine everything. I think crypto's decoupling, though, from the correlation. So we'll get some, let's see, next week. We got Thanksgiving coming up, so not much is going to happen. But next week, we will have PPI on Tuesday at 8:30. I'll get up for that. Then all these red events right here, by the way, I use this Forex Factory calendar for over a decade now. What I do is I just set this to USD, and this is what I check at the beginning of the week. This actually has like the forecast, and then this will update when it happens. But used to in the past, things like retail sales didn't matter. You wouldn't see any movement in the stock market. But even today, with this preliminary UOM consumer sentiment, I don't know what that is. What is this? This is University of Michigan survey based on consumer sentiment. Okay. Well, this actually gave a little reverberation in the stock market today. I remember seeing this today on, here it is. It was right here at 10 a.m. Boom, took out some stops. People that were going long in here and had stops down here. Woof, and they're sad pandas. But yeah, just anything related to what the Fed might be looking at for interest rate decisions is going to be a volatile event to watch. And so next week, 8:30 Tuesday, I'll be up for that. I haven't been streaming these, but maybe I should if people are interested. And retail sales, yeah, 8:30. I'll just be honest, it's hard for me to get up this early. I'm a night person. Week after that is Thanksgiving. Not much going on there. Let's see. When's our next? We got GDP. Yeah. Unemployment, Friday, December 2nd. You know, what's funny is we're kind of coming full circle. I can't believe that the year has passed already, but the last year, December 3rd, jobs report is right here. See this bar right here on Bitcoin? Boom. Saturday, well, it was Friday. It was the 3rd, December 3rd, 2021. This was when I noticed and tried to tell everyone, you know, hey, interest rates are affecting cryptocurrency. And I got blank stares. Like, whatever. We don't need anything to do with TradFi. There's nothing that affects us. All those boomers and their stocks and bonds, we don't need any of that. I was like, guys, if interest rates go up, crypto is going to hurt. And though this was before the Fed announced that decision, before the Fed announced that they were going to raise interest rates, crypto responded to a U.S. jobs report, guys. And it actually got it bearish on this side of the cloud. Like, TradFi is influencing this system that you love and hold dear. You need to pay attention. But nobody listened to me. And the rest, as they say, is history. So that's going to be probably the next big driver before the FOMC, and we'll keep an eye on it. But I've got places to be and people to see and fun to have. I hope you all have a great weekend. Thanks for joining me. One more. Oh, actually, tell you what. I know I'm closing out, but I got some questions here. Let me go through them. So, do you think we should continue to expect a correlation between Bitcoin and SPY? Okay, so actually, I'll reiterate this if you're kind of late to join, Eden. I talked about this at the beginning of the live stream. We're going to use the correlation coefficient here for SPY versus BTC USD. Okay. And funny that you asked that. No. I'll show you right now. Because this is one of the key things that I led with. The correlation coefficient is down here. And of course, if you have a 1 correlation coefficient, that is a perfect correlation. So for much of this year, there has been a high correlation. You know, there's been different points here. But much of this year, there has been a high correlation between the stock market and crypto. Only recently, really today and yesterday, you now have an inverse correlation. And that's because crypto is going down, the stock market is going up. So you have a flippening of the correlation. The first time we've seen it since December of last year. So now stocks are outperforming crypto bigly. And really, it's, you guys, if you watch my channel, if you know me, if you want to know more, join my Discord. I don't charge. I just talk and share ideas. But there was a big spike on Thursday, October the 13th. This was, this was probably, I think, the CPI from last month. I think this is the CPI from last month, same time of the month. Yeah. This right here, this daily bar right here, which was also a big print, kind of like we had on Thursday, that inflation was going down. This spike is really the key to key off of. I've been watching this right here, especially in futures, and been saying since that Thursday that you have to rely on that spike. It was a takeout of the low that it set and then a stop run. Even though it's the stock market as a whole, that right there is your signal to go long. And you can have a stop below there. So this is now the low that the stock market is based on. But as you can see, with an entry here, this thing just keeps on going up. I fully expect, well, let me caveat that. You know, this is not financial advice. What I'm looking for, if this was any other instrument, Bitcoin or, pork belly futures, I would be aiming for this with a stop down here to get back up to at least a 3-to-1, or in this case, maybe this high up here. I really think you're going to see over time, maybe before the end of the year, a 4,200, maybe even more stock market based on this little price volatility spike right here. So that's what's going on in the stock market right now. This is the ES futures, which I use to gauge the S&P 500. But yeah, to answer your question and bring it all back, there is now a breakdown of the correlation between crypto and stocks are outperforming. Now there's a negative correlation. So I'm going to go ahead and say you can no longer depend on the correlation of stocks and crypto. I'm sure that we'll see similar events because they're both being driven by interest rate decisions. But now you're seeing a secular divergence in what is driving them. And I'm sorry to say this. I'm going to go ahead and say, and I told you so here. I don't know if it's anyone particularly watching this, but friends that I really love and they're into crypto, I keep telling them that I know you don't like TradFi. I know that you think that crypto is the future, but you can't deny that the baby boomers, which know nothing and want to know nothing about crypto, are the wealthiest generation, a very big generation of our population, and they're all getting older. And they don't care about crypto. They're not going to take their money out of their investment savings and buy crypto with it. They're going to put it into safer aspects, and they're going to do one more thing. They are going to use it to prolong their life. And maybe I need to do a video about this as well, but you really need to be looking for the next 10 to 20 years into healthcare. Healthcare took a big hit today. I know that pharmaceuticals took a big hit. Bristol Myers basically banged off that top. UNH, that's another holding of mine. But look, over the next 10 to 12 years, if you don't need a Lamborghini now, you should be really still looking into TradFi and especially into healthcare for all these boomers who are getting older. Because they're not going to be buying your bags of crypto in their last, season of life. So you need to be looking for what this generation is going to be buying. And so I've been trying to tell people that are my good friends in crypto that, look, you had a good run. I'm not saying it's not going to happen again, but you need to diversify. You need to consider the fact that there's this hundreds of years of history behind stocks which are representations of value of companies that produce wealth, that produce goods and services. And by owning the stock, you're entitled to part of that revenue stream. That's the whole premise of stocks versus these cryptocurrencies, which are only backed up by people's perception of value of what they'll be worth in the future. There's a big difference here. Have your crypto, but don't ignore traditional finance. Please, friends. Let's see here. Can I explain coin price today? I'll tell you why coin and Robinhood are going down, because crypto's going down. And I don't want to own either one of these stocks, honestly. Why it popped back up? I don't know. I think that even the Coinbase is at $57.26. I think that it's overvalued by $57.26, honestly. That's just my opinion, though. They've done more to hurt the crypto ecosystem than any other company. So plug as I close up here, come join me on Discord. You can find the links below. That every Friday I stream this on YouTube, Discord, and TradingView. I don't charge for it. I don't want to make money. I'm a trader. Okay, I'm a trader and investor. I don't need your money. I just like to have people to talk to and bounce ideas off of, and people to share ideas to me. And then sometimes I also like to inverse people that are really bad. That's my selfish plug for that. So, yeah, thanks, Jen, for reminding me of that. But hope to see you there. Have a great weekend, everybody, and trade wisely.